Welcome to Talk Tickers, your deep dive into the story behind the stock. Today, we're looking at Halliburton. Now, their latest earnings call was a really interesting one. You had management playing it cool, sounding pretty cautious, but the stock, it just took off. So what's going on here? What did the market see that maybe wasn't in the official script? Let's get into it.
And boom. Right away, the market gave its verdict. And it was a loud one. Halliburton stock closed the day up over 4%. I mean, that's a pretty clear signal, right? It tells you investors basically ignored the cautious talk from management. They were listening for something else entirely, a much bigger story hiding just beneath the surface.
So, here is our game plan for this breakdown. First, we'll hit the Q4 numbers. Then, we'll dive into management's strategy for the year ahead. After that, we'll get to the juicy part, what the market actually heard. And we'll wrap it all up with our tech on what to watch for on the next call.
All right, let's kick things off with Section 1, Q4 by the numbers. And honestly, it was a really clean quarter. Halliburton finished the year strong, showing great execution and a serious commitment to returning cash to shareholders.
Okay, so take a look at this. It was a solid beat across the board. You've got revenue coming in nearly $300 million higher than the street was looking for. But the real headline here, it's the earnings, 69 cents per share. The consensus was 55 cents. That's a massive 25% surprise. You just don't get that without some seriously good cost control and running a really tight ship.
And this right here, this really tells the story of what they're doing with their money. The company churned out almost $2 billion in free cash flow for the whole year. And what they do with it? They turned around and handed a whopping 85% of it right back to shareholders. We're talking buybacks, we're talking dividends. It's a huge statement about their financial discipline.
Okay, so that's the rearview mirror. A great quarter. But what about the road ahead? Let's get into management's playbook, because despite those strong numbers, their tone for 2026 got a lot more careful. They're basically telling everyone to expect a rebalancing year for the whole industry.
And this is where you can see the real push and pull in their forecast. On one hand, the international business looks solid. They expect it to be flat or even up a little. But on the other hand, North America. They're bracing for a pretty significant slowdown there, guiding revenue down in the high single digits. So the whole strategy for the year hinges on their global operations picking up the slack from the US market.
So you might be asking, how are they going to handle that slowdown in North America? Well, it all comes down to this strategy they call maximize value. And what that really means is they're not going to chase business just for the sake of it. If a job isn't profitable, they'd rather park their equipment, literally stack it and wait. It's all about protecting their margins and their assets for when the market turns back up. Pretty disciplined, right?
And that caution, it was especially obvious when they talked about the very next quarter. They're flagging some pretty serious headwinds for Q1 2026. Their completions and production division, or C&P, is expected to take the biggest hit. They're guiding revenue down quite a bit, and margins, well, they're looking at a drop of around 300 basis points. A big reason for that is just normal seasonality, plus some really strong tool sales they had at the end of last year that won't repeat.
Okay, let's pause for a second. We've got a great end to the year, followed by a pretty bleak forecast for the next quarter. So why on earth did the stock jump 4%? It just doesn't add up, right? Well, this is where we get to the real story. It's about what the market was listening for, and it has a name, the Venezuela wildcard. So check out this quote from CEO Jeff Miller during the Q&A. This is what changed everything. Remember all that cautious language in the prepared remarks? Well, when he was asked about Venezuela, that caution just evaporated. He sounded incredibly confident, saying they could scale up fairly quickly. He basically told the market, we're ready to go. The moment we get the green light, we can move.
And to put this wild card into perspective, just how big of a deal is it? Well, you have to look back about a decade. But at its peak, Venezuela was a $500 million a year business for Halliburton. That's a huge number, and it's exactly the kind of concrete, tangible figure that gets investors excited. Suddenly, you have this massive potential growth story that, frankly, nobody was really thinking about before this call.
And if you need any more proof that this was the story of the day, just look at the trading volume. On a normal day, about 11.5 million shares trade hands. On earnings day, it shot up to nearly 27 million. That's more than double. You know, that's not just a few people taking notice. That is a flood of money coming in from investors who are betting on that future potential, not the bumps in the road next quarter.
Okay, so let's put all these pieces together. What does this all mean for Halliburton stock between now and the next earnings report? This is our take.
We see this playing out in a few steps. First, the next quarter's results. We think they'll come in pretty much exactly as management guided, so don't expect any big surprises there. Second, the stock's price action.
Because of that, we expect the stock to probably trade in a range for a little while. It's kind of like the market is in a holding pattern, digesting the near-term weakness while waiting for some actual, concrete news on Venezuela. And that setup brings us to our final rating.
So our official rating for Halliburton is outperform. And here's the thinking, plain and simple. We believe the market has already factored in the slowdown in North America. That bad news is already in the price. What isn't fully baked in yet is the massive upside. When you combine their steady international business with the huge high-margin potential that Venezuela represents, well, the risk-reward setup just looks really, really attractive from here.
And as always, just a quick reminder, this is not financial advice.